Tune into Market Fatafat. This is a show where we get you all the buzzers that are buzzing on the back of news floor, on the back of technicals. And on the technicals now, we're joined by Kunal Shah, Senior Technical and Derivative Analyst, Mirae Asset. Sher Khan is now joining us. Hi, thank you so much, Kunal, for joining us. Let's get going with the show then. Kunal, you've picked out GRSE for us today. Tell us what are the levels to watch out for. This stock is up in about 4% in trade. In fact, the stock has done exceptionally well. It's a clear outperformer. 30% upside is what we have seen in the last 6 months. Do you see more upside, the positive momentum to continue? What are the levels to watch out for?
I think technically, definitely we have seen a breakout which has just come in for the stock. I think now the entire defense pack, you will have to bifurcate into sectors. And I think shipping as a sector will likely to continue to do well in the very near term as well. So that's why I have picked up GRSE. Even on the technical charts, there has been the momentum buy which has picked up. The momentum indicators have also indicated a buy crossover. So it's a clear buy signal. The support for the stock on the downside is now placed at 2,500 for the stock on the downside. And I'm expecting target for a new high. The all-time high for the stock was somewhere around 3,300. So you can say that the first target would be close to 3,200 and then it can head towards 3,700 on the upside as well. So that's why we have picked up GRSE. I think a clear momentum buy, as well as for the next 3 to 4 months, the stock should do really well.
All right, so that's GRSE firing away on all cylinders. But moving on to the next counter, which is Ayesha Motors. That is a counter that is in focus on the back of its Q2 results. Now, largely inline set coming in with the 18 hours estimates, but there was a slight bit of a miss that came in on PAT. Let me read out the numbers to you first. The PAT came in at 25% up on a year-on-year basis at 1,369 crores. So there was a slight bit of a miss on that front. But the rest of the numbers, like revenue, saw an uptick of 45% on a year-on-year basis. EBITDA stood at 1,513 crores, up 39% on a year-on-year basis, and margins came in at 24.5%. So all of these numbers were largely in line with what we were penciling in. As far as the con call highlights are concerned, the management has said that in a mid-size motorcycle segment, RE continues to the dominance with around 84% market share, and they have launched 3 products, refreshers, and expanded the network to over 2,000 operational stores and maximize the production capacity during the quarter. So that's the word coming in from the management. Now let's take a look at what Goldman Sachs has to say about Ayesha Motors. They have revised the target price to 7,800 and they're maintaining a buy call. They have it's an upward revision coming in from Goldman Sachs, but nonetheless, as of now, the stock is succumbed to selling pressure, just like the rest of the market.
So that is Ayesha Motors for you. But Kunal, you've picked out Glenmark for us. It's trading about 2% higher right now as against the market, which is trading quite lower today. But what are the charts suggesting from here on? In the past 6 months or so, it has seen a good growth of about 30%. It has given those kind of returns. Do you think that kind of trend is going to continue, or could it peak from here?
I think the stock had recently seen a top in the month of July 2025. The highs were somewhere close to 2,200, and post that, stock has been in a corrective mode. And I think now we are seeing the bottom formation happening on the technical charts. Volume-based buying is what we have seen. So the smart investors have entered into the stock, and I think now we'll see a good move on the upside. So that's why we have initiated it as a buy over here, and it looks strong. We have even pushed it to our clients. 1,800 is a very strong base on the downside for the stock. Till the time it's holding on a closing basis, the view remains positive. I'm expecting the first target somewhere close to 2050 on the upside, and the next target would come to 2,200. So a good risk to reward bet, as well as from the current levels, it looks like a good buying opportunity in Glenmark.
Looks like a good buying opportunity. That's Glenmark. But let's talk about and clear outperformer of the day. That's Bharat Dynamics. It's up more than 7% today. This is after a very strong Q2 performance and also a major new defense order win. Now, revenues in the second quarter, they more than doubled. EBITDA rose about 90%, whereas the net profit, that saw a jump of more than 75% on a year-on-year basis, though margins were slightly softer at that 16.4% level. But execution momentum, that remains strong for Bharat Dynamics. It also got a boost from a 2,000 crore rupees order from the Ministry of Defence to supply Invar anti-tank missiles to the Indian Army. In fact, brokerages are also upbeat after the results. Nirmal Bang has maintained a buy with a target price of 1,774, citing a robust order book of over 3x annual revenue and strong projects. So yes, that's the word coming from Nirmal Bang. If you talk about Nuvama, That has also retained a buy with the 2,020 rupees target, highlighting a 22,800 crore backlog that the company currently has. So yes, very strong order books is what Bharat Dynamics has right now, and very strong set of numbers, and hence the stock is in absolute rally mode today.
Absolutely. Let's move on to the next counter that is also firing on all cylinders. That's up almost 7%. In fact, more than 7% now is Jubilant Foodworks on the back of its Q2 numbers. The stock, in fact, jumped 8%. Cooler from there, but nonetheless holding on to strong gains on massive Q2 jump. Now, if you look at the numbers, the net profit has come in at 64 crores. That's up 23% on a year-on-year basis. The revenue is seeing an uptick of 15.8% on a year-on-year basis. The EBITDA is also up 15.5%, and the margins, however, came in slightly flat at 19.4% on a year-on-year basis. Now, Morgan Stanley has also come out with a note. They are maintaining an overweight rating, and the target price remains unchanged at 775. They feel there's a strong momentum. October demand has tracked ahead of the management expectations. The margin outlook, management has reiterated the 200 bips higher EBITDA margin over the next 3 years, and that is a big positive coming in for the company. And on the back of that, they are retaining their 65 to 70% pizza market share and see opportunity in the premium segment. On the back of that, Morgan Stanley is maintaining an overweight, and Jubilant Foodworks is up and away 7.2% in trade.
All right, so that's Jubilant Foods for you. But Kunal, again, you've picked out another pharma name, that is Torrent Pharma. Just wanted to understand, is this as good an opportunity like Glenmark, just like you highlighted a couple of minutes ago?
I think definitely. I think post the results, the company had seen before the result. In fact, the company had seen a long bit of consolidation phase, and post the results, we have seen the breakout coming in. So now again, we are seeing that the big players have entered into the game, and overall the structure is positive, and we expect this strong momentum to continue on the higher end. So currently trading somewhere around 3,800. I think good level to continue adding the stock on any declines what you got. And I'm expecting a positional target over here close to 4,200 for the stock. So, and on the lower end, the support is now placed at 3,600. So any decline into the stock would be a good buying opportunity. Probably 38.15 is where it is trading. So 38.15 to 37.50. This could be a good range in which you can accumulate the stock.
All right, that was the last stock of the day. Kunal, thank you so much for taking the time out and joining us with all the stocks.